Well, Australia's property market has reached a new milestone with the combined value hitting $11 trillion at the end of September for the first time, growing by $900 billion over the past 12 months. Despite this, the housing market is slowing. Here to discuss all things property is Anthony Landahl, Managing Director at Equilibria Finance. Why are we slowing?
Nice to be here, Juliet. Fundamentally, we've got a situation at the moment where we're getting more supply across all of the markets and a slowdown in demand. So we had 12-month annual growth earlier in the year around 9.7%. It's at about 6.5% at the moment. So the market generally in spring sees an uplift in listings. What we're not seeing this year is the follow-on from the demand side of the ledger, which is meaning there's a little bit more stock, less competition around the concentration in some of those areas and a slowdown in the market. But if you look at some of the states, Perth's grown 24% over the last 12 months, and Adelaide and Brisbane are 15%. Hobart and Melbourne have gone backwards, but nationally we're starting to see a slowdown.
So why do you think that is, given that spring you normally see such an uplift?
Australia's fundamentally got a chronic shortfall in supply, so we've still got a growing market.
But you mentioned demand lower too.
So we're growing at 6.7%, but what we're seeing is that uplift in listings. We've got the highest amount of listings nationally since 2021, but clearance rates are at around 60%. The 10-year average is around 65%. So we're seeing a pretty cautious approach from buyers, effectively, both on the investment and the owner-occupier side. That's creating the slowdown. I think the other element we need to factor in is we've had such strong growth in Perth, Adelaide, Brisbane that was never really going to be sustained. As I mentioned, Perth's over 20%, Adelaide and Brisbane 15%. So those markets are slowing as well, essentially because the demand hasn't followed the uplift in stock over spring.
Well, most of the people are in Sydney and Melbourne. What's the demand like for those places?
Well, Sydney's grown about 4.5% over the last 12 months. Melbourne's gone backwards. Its market's actually decelerating at a negative rate. It's pretty reflective. What we're seeing in those markets is more affordable areas. We're getting stronger growth, and areas deemed less affordable, where your price range is more difficult to get into the market. Those markets have actually been slowing, so those markets are coming off. So we're seeing a lot of people drifting to those more affordable areas. Demand's still there, houses are still selling, clearance rates are still at 60%, but they are the slowest. It's below the 10-year average of 65%. Sydney, Melbourne are fairly reflective. Melbourne's probably the area where it's really grinding to a halt. Its value over the last 12 months is now going backwards.
Is most of the demand that is there, and I'm talking nationally, coming from people that want to live in their homes or investor activity? Yeah,
good question. Investor activity's finding a bit of a surge. Home buyers are very cautious around interest rates, cost of living pressures, being able to actually buy where they want to live. And we are seeing some home buyers sitting on their hands, maybe waiting till next year to see if the rate cuts enables them to enter the market. Investor credit's at 39% of credit flows at the moment, which is above where it normally sits, which is around 35%. What investors are seeing is opportunities there's more supply, as I mentioned before, so there's actually some investor grade properties there. The market's still growing, so they're looking at longer term capital growth, and they're also seeing that the rental market is still actually growing, albeit at a slightly slower rate. So investors are seeing some opportunities out there at the moment, and that's reflected in their credit flows, which are close to 40% of the total market.
What are we seeing in terms of default or people being forced to sell due to higher rates?
There's always been a concern around that. There hasn't been a lot in that. There was a little bit of a surge recently. What we're more seeing is people who might have an investment property or a holiday home, they might be looking at offloading them. The providers are generally trying to support people who are struggling with repayments, with maybe some interest-only periods or a review of their repayments to give them some relief. So we're not seeing that big surge. We're not seeing that big fixed-rate cliff, because most people who were on those 2-3 year fixed rates most of them are at the end or coming to the end at the moment. So thankfully we haven't seen that, but there are some people struggling, no doubt about it. And there have been some people selling investments. Some people have had to downgrade, but we aren't seeing a big rate of defaults.
So it's interesting because I think Michelle Bullock had said maybe that she saw around 5% of people may be forced to sell. I know we've got the RBA 2024 annual statement coming out. It's probably out right now. I don't have time to look at it while we're talking, but it'd be curious to see what the RBA is thinking about that, given the statistics you're seeing.
I think that's fairly consistent. There's people who are defaulting where they just cannot pay their mortgage and they're essentially giving their house back to the bank. There's other people, which Michelle Bullock was also referring to, that may not be able to afford the place they're living in and might then be looking at downgrading to another property, which was also captured in terms of people selling. So there is a bit of a combination. And I do note that, Michelle Bullock did say that maybe some people can't keep affording to make their repayments. That was in the context of both defaults and also maybe people downgrading to more affordable properties and repayments.
Okay, so then when you were talking about the rental market, have we potentially seen a peak, or what is it happening for people that are up to renegotiating their lease?
We have seen the peak. We've seen rentals come off quite a bit over the last couple of months. Again, that's for a number of reasons. There was a big surge in the rental demand in and around the way people were living, what people were looking for. So there's actually been a shift in what renters are looking for. Some renters have moved back to mum and dad. Some renters are sharing houses again. And we're also seeing more investors in the market, which is bringing more stock into the rental market. So the rental market is still growing. However, those vacancy rates of under 1% and that rental growth that we saw, that surge 12 months ago, has absolutely eased. And we're seeing a more stable and normal rental market, albeit it's still strong growth. The fundamentals of a chronic shortfall of supply is still impacting the rental market as it's impacting buyers.
I've just been trying to catch up on whether or not there was anything that might move the market or the property market from the RBA, but it looks like they're talking about how they're communicating, which I think a lot of people have been saying they're doing a good job.
Yeah, look, I think the way that Michelle Bullock's communicating, she's being upfront. She's not. She's dealing with the practicalities of inflation, and she's dealing with the practicalities that they're lever to influence that is interest rates. And she's certainly indicating that there's more work to be done on inflation. So I think so far Michelle Bullock's blocked out that political noise and a lot of the media noise and is focusing on the job, which is inflation.
So with the average now, well, not the average, but money market saying the first rate cut comes around May, does that mean that, potentially January, February, that summer month may not be as positive in selling than you had potentially expected? Yeah,
I think we will. I think the view is generally shifting further back. Some people were, and even some of the banks are still saying maybe there'll be a rate cut before the end of the calendar year. But I think the general sentiment now is we're looking at middle of next year, maybe one or two next calendar year at some point. That'll definitely impact the market. We tend to see a pretty strong slowdown anyway in December and January, where people are focusing on other things with holiday season and stuff. But I think there is definitely a portion of the market that are waiting until they see what happens with interest rates. They're generally the home buyers, as distinct from the investors, and I think that will have some influence on the market into next year and into their buying behaviour, and whether they just wait and see until next spring, as distinct from when autumn comes along earlier in the year.